Zero inventory might be the most misleading phrase in online business. Now, because while you don't have inventory sitting in a warehouse, someone is still paying for every mistake, every failed ad campaign, and every customer acquisition. The question is, can the numbers still work in your favor? Today, we're going beyond the hype and calculating the real economics of print on demand to find out whether this business model is actually as attractive as people claim. We are looking at print on demand, or POD. The concept is simple. You create a design, you upload it to a platform like Printful or Printify, and when a customer buys a shirt from your Shopify store, the supplier prints it and ships it directly to them. You don't buy 100 shirts up front, you buy one after you've already sold it. It sounds like the perfect low-risk business. But as we know, low risk often comes with low margins. The unit economics, the t-shirt math. To understand the business, we have to look at a single transaction. Let's take the most common POD product, a standard cotton t-shirt. The cost of goods sold. Let's say you use a premium provider like Printful or Printify. A high-quality Bella plus Canvas 3001 is roughly $4 to $5. Front print cost is around $5 to $7. In the US, shipping to the customer is about $4 to $5. Total base cost, $13 to $17. Let's average it to $15. This is your hard cost per shirt, the retail price. To make a decent margin, you can't sell this shirt for $20. You need to sell it for at least $25 to $30. Let's say you price it at $28. The gross profit calculation. Revenue, $28. Cost of goods sold, $15. Gross profit, $13. You just made $13. That looks great, right? Not so fast. We haven't paid the middlemen yet. Payment processing, Shopify payments, PayPal, or Stripe. They take roughly 2.9% plus 30 cents. On a $28 sale, that is roughly $1.10. Platform fee. If you are on Shopify Basic, that's $29 per month. If you sell 100 shirts a month, that's roughly 30 cents per shirt. The adjusted gross profit, $13. Payment processing, $1.10. Platform costs, 30 cents. Net profit, $11.60. So on a $28 sale, you put $11.60 in your pocket. That is a roughly 40% net margin. If you sold 100 shirts a month, you'd make $1,160 profit. This is the dream scenario. The math works beautifully if the customers just walk into your store and buy. But here's the reality. In 2026, nobody walks into a new store, and that is where the math gets brutal. The customer acquisition cost, the real inventory. In the world of e-commerce, attention is the inventory you have to buy. Let's look at the primary driver for POD, Facebook and TikTok ads, the CPA, cost per acquisition. This is the amount of money you spend on ads to get one customer. If you spend $100 on ads and get 5 sales, your CPA is $20. If you spend $100 and get 2 sales, your CPA is $50. For a beginner in a competitive niche like t-shirts, a realistic CPA on Facebook in the US is often between $15 and $25. Let's apply this to our math. Revenue, $28. COGS and processing, $16.70. Ad spend, $20. The profit calculation, $28 revenue, minus $16.70 costs, minus $20 ads, equals minus $8.70. You just lost $8.70? You made a sale, you shipped a product, you paid for the ads, and you lost money. This is the trap of the zero inventory business. You swap the risk of holding physical inventory for the risk of buying expensive digital attention. If your CPA is higher than your net product profit, you are burning cash. To make this business work, you have 2 levers. Increase price. Can you sell that shirt for $35 or $40? Lower CPA. Can you make better ads? Understanding this equation is the difference between a hobby and a business. Once you see the real cost of that customer, you realize that winging it isn't an option. It's all about growth from here. Hit that subscribe if you're ready to level up your strategy. The hidden costs, returns, and mistakes. The math we just did assumes a perfect world. Every shirt is printed perfectly. Every customer is happy. This never happens. In the POD model, returns are a nightmare. Because the item is custom printed, you cannot resell it. It has your unique design on it. If a customer says, it doesn't fit, or I don't like the material, you have a problem. The return math. Option A, refund. You refund the customer $28. You lose the $15 COGS. You lose the $1.10 processing fee because banks don't refund fees. Total loss, $16.10. Option B, exchange. You pay to ship a new shirt. Total loss, another $15. If your return rate is 5%, you have to factor that loss into your pricing. For every 100 shirts sold, 5 come back. Total loss on returns, 5 times $16.10 equals $80.50. That $80.50 comes directly out of your profit from the other 95 sales. It reduces your profit per shirt by roughly 85 cents. It sounds small, but in a low-margin business, 85 cents matters. Plus, there are mistakes. The printer might print the design crooked, the ink might be faded. Reputable POD companies like Printful or Printify will usually reprint it for free, but you still have to pay for the shipping of the new item to the customer. You have an unhappy customer who might leave a bad review. If your conversion rate drops from 2% to 1.5%, your CPA effectively goes up, and you start losing even more money. The startup costs, the low barrier lie. We call it a zero inventory business, but it is not a zero cost business. 1. The storefront. Shopify plan, $29 per month. Domain name, $15 per year. 2. The design assets, Adobe Illustrator or Photoshop, $20 to $50 per month. Or hiring a freelancer for designs, $50 to $100 per design. 3. The samples. This is the most overlooked cost. You must order your own shirts to check the quality. If you have 5 designs, you need to buy 5 shirts. Cost, 5 times $15 cost plus shipping equals $75 to $100. You cannot skip this. If the shirt feels like plastic, you will get chargebacks. 4. The ad budget. This is the highest inventory cost. To test 5 designs to see if they sell, you need to spend money on ads before you make a single sale. Testing budget, $500 to $1,000. Total real startup capital. Store and software, $50. Samples, $100. Ad testing, $500. Total, $650. This is still much cheaper than buying 500 shirts up front. But it is not zero. You are risking $650 to test the market. If the designs fail, that money is gone. It is the cost of data. The verdict, is it worth it? So, with tight margins, high ad costs, and return risks, is print on demand dead? Absolutely not. It is simply a game of volume and branding. The t-shirt business is hard because the market is saturated, but the brand business is thriving. If you can build a brand where customers come back, your CPA drops to $0 for the second purchase. Repeat customers. This is where the profit lives. If a customer buys 3 shirts from you over a year, you pay for the ads only once. Sale 1, small profit or break even. Sale 2, pure profit, no ad cost. Sale 3, pure profit. The winning formula. Higher ticket items. Move away from $28 t-shirts. Sell $50 hoodies, $60 yoga mats, or $40 backpacks. Higher price points mean higher absolute dollar margins. A $20 margin is easier to live with than a $5 margin. Niche down. Don't sell funny shirts. Sell shirts for fishermen who love bass fishing. The audience is smaller, but the conversion rate is higher and the CPA is lower. Organic traffic. Use TikTok or Instagram Reels. If you can make a video that goes viral organically, your CPA is $0. You get the customer for free. This is the holy grail of POD in 2026. The final math. Fail strategy. Selling generic designs with paid ads. Result. Loss. Success strategy. Unique designs in a niche plus organic content plus email marketing for repeats. Result. High profit. Print on demand is not a magic button. It is a logistics and marketing business. The zero inventory claim is true. You don't have boxes in your garage, but you have a different inventory. You have an inventory of ad spend, an inventory of creativity, and an inventory of patience. If this breakdown helped you see the real numbers behind the zero inventory dream, let me know in the comments. And if you want to see the math behind other online business models, hit that subscribe button. We have a lot more to uncover.